Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stone with tonight's Deep Dive. It is May 8th, 2018, and with everything that's going on in the Middle East and the Iran deal, I thought I would take a look at crude oil, ETF being USO. Now, what's basically happened here is that we're in a trading range, and we are basically starting to break above that, although there was a great deal of volatility in crude oil today, but both in the RBOB and within crude oil, they're both kind of in a trading range with some major potential, although I might think that it would be short-lived, so I'll explain. Trends are all pointing to the upside, no surprise given the fact that the market has been trending quite nicely as of late. Technical rating also positive. The seasonal tendencies are going to be the kicker here today. They're positive right now. Now, there's nothing that's showing up here on the pro alerts. Nothing has really triggered, but I suspect that we will see things in the near term. When we take a look at the watch list, you can see that RBOB is at the height here, very, very strong on the bull side. Crude oil's down on the list, but still positive on the green, meaning that it's got a long bias. And so when we look at a lot of our different watch lists, as I scroll through here, you can see that there's a number of different entities, conditions that we're looking for that are summarized into this particular report. So where things stand then right now is that they're both on the bullish side. When it comes to the seasonal tendencies to the market, you can see both crude oil and RBOB are listed here on the top 10 list, and it's kind of an important list that you'd want to look at. To get to it, you go to charts, you go to overview, and then seasonal top 10. So you can always see which markets are on the seasonal tendency side and are worth watching. If we actually take a look at crude oil, what you'll see here is the blue represents the 5-year tendencies to the market, and we'll look at the 10 years here in a second, and then the black line represents this year on a continuous basis. You can see that there's a little bit of chop that we're in right now, but we're heading into a bullish, little pop to the market, and then if you really look at this carefully, that's the peak for the year, and then it's down all the way through to the end of the year. So the seasonal tendencies, at least on the 5 years, the last 5 years, have tended to, the tendency has been for them to top out here in late May. If we look at the 10-year notes, you can see that it kind of pushes it forward a little bit in time. So the blue line represents 10 years worth of data. And this is the one that I typically will look at. And in this case, you can see a little bit of a bounce, and you can see a retracement. You can see a little thrust to the upside. But no matter what, the 5 years are looking at a peak here in late May. Market kind of does a lot of nothing, but does have some other peaks, one in June, early June we'll say, another one in late June, early July. But as soon as we hit those 3 peaks, then the market has a tendency to taper off for the remainder of the year. So bear this in mind that with where the market is right now, and I'll show this to you, what we have in crude oil is that crude oil, as opposed to RBOB, which is flirting with this resistance, the crude oil itself has bounced above, and currently, as I speak, we've got it at 70.15. It is still above this I'll call it weak resistance. It's only a 10, nothing too dramatic, and this number is 69.14, so it's above it for right now. And so for the most part, what we're looking for is, as long as it can stay above this support level that I'm referring to here, this 69.14, and we look at the seasonal tendencies of the market, we can see a little more of an upside biased 5-year charts looking at the end of May, the 21st actually, and then if you look at the 10-year charts, even with some chop, you'll see something in early June, and you'll see something in late June, early July, if you will. And so I don't foresee that we're going to see a major move under normal conditions, but with the Iran deal and how that's going to throw things in flux a little bit, who knows exactly how this is really going to play out. Now the systems, which I don't have up here right now, let me see if I can pull it up here real quick while I'm talking. We're actually short the market right now, this being crude oil. And what basically took place today was that we actually had a short position with that, I'll just show this to you, this strange elongated bar here. We actually did go short the market, and so we do have a short position on a 120-minute bar system. So it's short-lived. We're down some money on the trade right now, and the reason I mention this is that that major key support that I've been referring to, that will be the kicker. If we stay above that 69 figure, then will most likely get this particular trade, this short position, to unwind itself, and hopefully this last gasp into the, at least as a minimum, into the latter part of May. Then hopefully the systems will flip out of the short and get into a long position here fairly quickly. If that support level doesn't hold, then most likely we will not liquidate this position and perhaps even have some other short positions really follow suit. So I'm pointing this out so that you have two things that you're looking for. The first one is this support level right here, which again is at 69.14. This for the June contract, just so that there's no ambiguity as to which contract that we're looking at. That's going to be the key on the support side. If we hold above that and truly find legitimate support here and don't have one of these long bars here that has penetrated but is able to still come back above it towards the tail end of the day, as long as we can actually stay above this on a closing bar basis, in other words, then the seasonal tendencies, as I was pointing out, could bode well for the market as a whole. So, you know, that being the case, I'll just come up with the accuracy just so we can look at that chart one more time. And again, on the 5-year charts, we're looking at the latter part of May, which is coming up here, you know, fairly soon. Today is the 8th, and we're looking at the 21st, I believe, for that particular peak, and then it's downhill from there. And then again, we have a similar type nature, more the tail end of May. We even say that you know, it's close enough to almost getting into early June, and then in early June there's that little sell-off, and then, as I mentioned, that there's those two other peaks that will come thereafter. But we'll see how things are going to play out with that support level that I've been referring to. As long as we can stay above that, then I think the seasonal tendencies will be off to the races a little bit. You can see it very directly. That's a nice move right there. In fact, what I'll do is I'm going to pull up the seasonal projection. I don't always pull this particular chart up, but here's a seasonal projection chart, which takes into account all of the different seasonal time periods and comes up with a weighted average, and that's all that it is. It's just a weighted average, just trying to give an idea as to where all of the seasonal charts are referencing, and trying to give us some type of a perspective as to where things could go. So this being the case, this yellow dot from yesterday would be the low for this 20-day projection. The high is that the 21st, as I've been talking about, low to high, from that low point to that high point right there on a this being a VAMI chart, value added weight. Let's see, VAMI, value added. In this case, it's a daily, so it's a VADI, value added daily index. Try saying that. In this particular case, what we can do is we can come up with a low to a high based upon percentages, kind of normalizes. That's really what it's doing, and it's coming up with a projection of 3.69. This from the low, or from the 7th. Today obviously is the 8th, and so we'd be looking for some type of a pop. But you can see that this isn't just straight up, that there are little pops to the downside. So it's not going to be a straight up. It's going to be a volatile swing if we can stay above that support level that I've been referring to. So this is a really nice projection. It summarizes all of the information and really gives you a clear idea, but the only time that you're going to be looking at this particular chart is A, if the accuracy to the chart and across all the different time frames is there. If a market doesn't have a lot of accuracy, then the projection itself is going to be limited. So you only do this for those markets that have high accuracy, which is why that top 10 list is there, and both Crude and RBOB are listed there at the present time. And then what you're going to do is you're going to use this as a guideline. It's not, I don't use it this way, even though you have to create the chart. I'm not saying specifically that it's going to peak out on the 21st exactly. It's simply just giving a weighted projection into the future. And that's why we always defer back to the systems. And so the systems will dictate exactly what we do. And for this to be accurate, we're going to have to unwind our short position and have the thing flip over. And I think the crux to all of this is going to be that that support level that I keep referring to, this 69.14 level. So watch that particular level on a closing bar basis, and that will dictate, I think, for the most part, how we're going to be playing this market on the short-term basis, meaning going out maybe a week or so, not looking at it months in advance. I'm talking about just looking at it from a perspective of a couple of days up to maybe a week's worth of trading. So we will take a look at another market tomorrow. Thanks for watching.